Everybody, this is John. Welcome to the free video. Tonight I want to focus on a couple of sectors. Namely, first of all, let's look at the financials. So financials have a big squeeze. If we back up here a little bit to put it into context, you can see that while the financials had a really nasty time here at the beginning of the year, okay, in fact they were kind of the victim of some flash crash stuff. That was back in August, if you guys remember that. Since then, they've recovered, but have just lagged, and it's put into question some of what's going on, frankly, in the rest of the world. Now, as we come into the election, they actually are poised. They've got a squeeze here. They're actually acting well. They're helping. They're kind of the backbone of the markets right now, as a lot of other sectors are falling apart. Well, falling apart is a strong term, but XLP, consumers, I mean, that's kind of crazy. This is Starbucks, Disney. And this brings up an interesting question here in terms of what are the consumers doing with their money? Is everybody just glued to the television, watching CNN, full of anxiety, waiting for the fate of their own future and the nation on the elections, okay? Or, is there something bigger going on here? Well, I would say, like, if you dive in here to Disney, right, okay, either apparently this is a good time to go to Disney because the crowds are low, or you go to Starbucks. Maybe at this point everybody's juicing instead of getting some coffee. But it does show that the consumers are kind of taking a pause here, okay? But the banks are excited because maybe when this elections is done, we can start raising rates again and they can start making some money, okay? XLK, which is the technology sector, looks great. You've got Amazon, Google, Facebook. They're all making new highs. They're raking in the money. You can see there's another squeeze setting up here. But last but not least, and most importantly, energy is back. And obviously, after crude oil has been taking a bath, it's been holding up really, really well. It doesn't care that the dollar's rallying. This is a supply and demand kind of a shift. Prices came down, wiped out all the weak hands. The strong hands are back in play. I'm not looking for oil to go crazy here, but could we get $55 to $60 oil? Yes. And does that help the stock market? Yes. Okay. Now, it doesn't help consumers. Falling oil puts money in consumers' pockets. Rising oil takes it away, and there's probably some tie-in there. Okay. So at the end of the day, biggest things I'm looking at right now are what I would call pre and post earnings plays. Okay, two examples of that: Netflix in the trading room. This thing had a 2 standard deviation move with earnings. Okay, so that was for those of you that don't know, when that happens, you typically see a move up to sideways for the next 4 to 6 trading days. So this is something we did in the room where this is after earnings. We set up these trades, okay, and we're looking for a little bit more strength in Netflix. But the other trade, and these are the ones that are coming up, are pre-earnings trades. So Google is a good example of a pre-earnings trade setup, and this is one where we've got put spreads and long calls to help offset each other to make money going into earnings. Okay, so that's kind of the name of the game right now. It dovetails nicely because pre and post earnings plays are going to be the only thing that's going to happen that's interesting prior to the election, because all the other markets are going to be in hurry up and wait mode to see what Donald Trump is going to say next. Okay, that's what we got, and let's take a quick look at this.